So again, thank you for joining us for your financial tool chest. This is part of the Get Savvy Grow Your Green Stuff webinar series, which we've been doing for several years. My name is Andrea Pellegrini, and I run the Student Money Management Center for the University of Illinois system. Our colleague, Nikki Giancola Shanks, helped a lot with the slides today, but she was unable to join us for facilitating the webinar. And Kathy, would you like to introduce yourself?
Good. Hello, everybody. I'm Kathy Sweeler. I work with Illinois Extension in the area of financial education, and I'm really excited to be able to join you today.
Thank you so much, Kathy. So, as a reminder, collectively, the Get Savvy team represents organizations across the state of Illinois, which rest on the land of multiple Native nations, um, including the Peoria, Kaskaskia, Piankashaw, Wea, Miami, Muscooten, Ottawa, Sauk, Meskwaki, Kickapoo, Potawatomi, Ojibwe, and Chickasaw nations. And we have a responsibility to acknowledge these Native nations and work with them as we move forward as a vibrant and inclusive society. So, as usual, we like to kind of know who's joining us today. So, I will open up this poll here and get an understanding of who's joining us. So Extension, who Kathy works for, gets a lot of their funding based on who participates in our programming. So the demographics information helps us better understand both who's joining us as well as helps them maintain funding. So if you can respond to that, that helps us out. It is anonymous, so we're not gonna track you individually. So don't worry about that. But it also helps us cater some of our examples and our discussions about the types of financial tools we're going to be covering today. So it looks like we have people from all age ranges joining us today. We have both students and full-time employees and a few retirees, mostly women joining today, but we got a little bit of everybody. And we have a distribution of race and ethnicity kind of across the board. So there are several questions. There's 5 questions, so you might need to scroll down to answer some of those questions. It looks like about 80% of you have responded so far, so I'll leave it open for a couple more seconds. But again, we got a lot to cover today, so I'm gonna close that pretty quickly. All right, thank you so much. We'll end the poll, share the results real quick. As you can see, I'm going to stop sharing, but if the window stays open for you, you can just click out of it. So no big deal. So our learning objectives today, we kind of want you to understand what financial tools you can use to help manage your finances. Finances get more complicated depending on the transitions that you're going to. So we'll go over several different types of tools, including some new tools that exist. We're also going to talk about strategies that you can use to manage financial services wisely or choose them wisely. And we're also going to try to help you develop an action plan around financial services to improve your overall financial well-being. And we'll talk about what that means more at the end of the webinar as well. So one thing that we kind of want to get you used to is using that chat. So I appreciate prior to the recording starting, you getting familiar with that. But we kind of want you to think about what your biggest money question is right now. What kind of inspired you to register for today's event and what's on your mind as we enter kind of this shopping season or we continue the shopping season and some of the financial goal setting season that happens in January. So if you are comfortable, just let us know in the chat what your biggest question about money is. How to invest wisely for the long term, about retirement. That's a question for all of us. It's a continual question. So that's a good one. So there's a lot to emergency fund saving. Yes, that can be complicated, especially when emergencies seem to keep popping up. I have experienced that the last couple of years. My emergency fund, thankfully, is being replenished, but it's a habit that you have to get started with. how to pay down debt. Excellent. Yes, that is a challenge as well, especially if you have fluctuating or limited resources. So keep those ideas going in the chat. Kathy and I will take a look at them as we talk about some of the content that we have prepared for today. So I'm going to hand it over to Kathy to talk about spending, borrowing, and saving services.
All right. Well, thank you very much, Andrea. And we're going to be talking about these services kind of under the headings of spend, borrow, and save, because we just know that that's kind of an easy way to think about it. And if you might have remembered that Andrea mentioned in talking about the objectives, that there is maybe you want to make like a little to-do list, a financial action plan for yourself as we move through this. And we've put a link and actual document in the chat in case that helps you kind of pull together your thoughts. Because one thing we know is we only have you for about 50 to 60 minutes. And so we're going to be throwing out lots of good information, but there may be things that you want to follow up as we go forward. So one of the things that I think we don't always stop to think about, though, is that we can actually use our financial accounts by having different kinds to manage our cash flow and to kind of smooth over things so that, like for example, our emergency savings can be in an account that's maybe different than our account for our regular expenses, things that we're doing, every day, like food, transportation, having fun. And then, of course, not to get away from thinking about those larger expenses that you might be saving up for or managing, whether it's like student loans for students or retirement planning if you're in a different phase of life. So we really want to kind of think about what are the different financial accounts that are out there that we can use to help us meet our different financial needs and goals. And I think a good place to start with that is to think about what financial tools do you already use. So there's different financial tools out there. And if you can look at the poll rather than the survey link, sorry, we kind of got two things going there, but the poll is one we want you to look at and think about what have you been using lately, maybe in the last past month. And there's no right or wrong answers on this. This is really a chance just to kind of explore and think about what have you been doing, and are there things out there that maybe you haven't thought about using or haven't felt comfortable using. And it's a rapidly changing situation in the financial world that we're all, I think, just kind of trying to keep up on. So it looks like we've got a good number of people already participated. So I'll give it just a couple more seconds here because this is not critical, but we'll just, I think, go ahead and looks like I'm going to end the poll and share the results so you can see the variety. Lots of people using cash and credit cards and debit cards, and then other people using other things that maybe not quite as much, like money orders and gift cards and those peer-to-peer apps. So we'll keep thinking about this as we move forward. Thank you for participating. I really do appreciate that. All right. So moving on from like which financial tools do you use? I think the next real question is what do you want from a financial account? And that's something I had to stop and think about myself when we were putting together this. And I thought, what I really want first off is safety. I want to make sure my money's there when I think it should be there. I definitely want convenience. I want to be able to tell, where's my cash flow and what's my availability. And I want to know about it pretty quick these days. No more for those of us who can remember back a long way, remembering those days where you had to wait for a statement to come in the, postal mail to see how much money you had in your account. And then there may be other things that are important to you. And if you want to share those in the chat, that would be great. These are just the top three that came to my mind. As you're thinking about that, another one that comes up is fees. How much are we paying for the different services or financial accounts that we're using, and how does it you know if the fees aren't real transparent, sometimes it's useful to stop and think about how is this vendor making money if they're not charging me fees that I'm aware of. So those are all good things to be asking ourselves And you may want to jot down that on your financial action plan. What do you want from a financial account? What is important to you? So, thinking about that first one that was high up on my list, keeping money safe, in the United States, we have two main types of financial institutions for personal accounts. One is banks and one are credit unions. And what is really nice about these is both banks and credit unions' personal accounts, like checking and savings accounts, they're insured up to about $250,000 per individual per account. Now, if you have multiple accounts joined and things, it gets a little more confusing, but I think a quarter of a million works for most of us. Um, and so think that is something that is a real positive about storing our money in these types of accounts. Now, if you walk into or go through a website at a bank or a credit union and you're using their services to purchase investment type things like stocks and bonds or mutual funds, those are not most likely insured. But in the credit union world, it could be that some mutual funds specifically might be insured, but you need to ask questions because it's not a guarantee, it's not a rule that we can just say it's going to be insured. So keep in mind that things like checking and savings accounts are insured, but others likely not, although double check. So we've got banks and credit unions, and you've probably seen them when you drive around or heard about those. But what's really the difference? They're both financial institutions. They keep our money safe. They both have strengths and weaknesses, like anything else. Banks are for profit, and so they're not maybe quite as concerned with keeping costs as low as a credit union. One of the things that credit unions try to do is keep their costs low. But banks may have different services and options that you need or want, and a credit union might not be able to offer all of those and still keep their costs low. So you need to kind of think about what is important to you and which serves your needs the best when you're making a choice of whether you want to be at a bank or a credit union. And there's really small banks, large banks, small credit unions, large credit unions. So it's hard to generalize about what the services it may each offer. It really comes back to you as a consumer doing some comparison shopping and asking those questions that you have absolute rights to ask and you should ask. So, kind of thinking, we've been talking about these different accounts, and I think it's also now to think about what tools do you use when you make purchases or you pay bills. And so maybe just take a moment, and we've had some good conversations going on in the chat, to jot down, what are you using, you specifically? Like if you walk into a store today, what are you likely to pull out of your wallet to use to pay for? We've talked about, we had in that poll a lot of cash. Credit card might be the first thing that we pull out, whether it's because we want to defer payment or it's just very convenient. Some more, other types of different specific kinds of credit cards out there. I see a lot of people using things like Apple Pay, Google Pay. So pulling out their phones instead of a plastic card. Gift cards, we're definitely coming up on that season where we're going to be perhaps sharing gift cards with others. Debit cards work really well and conveniently for people. So lots of different things. Go ahead and feel free to keep adding in as you think them. Oh yeah, I'm so glad that somebody put buy now, pay later accounts. We're going to be talking about those. A credit card that gives rewards. So looking for those perks that kind of feedback. Nice. Great answers. All right. Good variety there. So I think we mentioned some of these already just in the chat. Let's see if we electronic transfers, which is more like just direct from your checking or savings account straight to whoever you're trying to pay, whether it's for your insurance bill or to rent or something like that. We've talked money orders and cashier checks are just a way, again, from working with your bank or your credit union to get that cash in a different format. And prepaid cards. So prepaid cards, I think, has come up, but I'm not sure we've all on the same page with that. A prepaid card can be something simple like a gift card to a specific store, but a prepaid card could also be something where you have your paycheck deposited onto it, and then you're paying for a variety of different things using it like a credit card in a sense, in that you have a plastic card that you're sharing with somebody when you purchase something, but the cash is on there, essentially is stored on that card or that account electronically, and there's a limit to it. It's not like borrowing. So an HSA card could be an example of that, depending, because it's tied to a specific account and it has a certain amount of money in it versus a credit card where you might be able to spend more. So something to think about, and we'll talk a little more about prepaid cards as we go forward. The other one we wanted to mention is the differences between a debit card and a credit card. So a credit card is really a form of borrowing. A debit card is typically tied to one of your financial accounts, like a checking account or a savings account. Turns out that federal law gives us a little bit different kinds of protection if somebody steals and uses your debit card than a credit card. It could be stealing it physically, or it could be using the number electronically or online. And you don't have as much protection with your debit card. If something happens, you need to report that you see, that you've lost it, or you see charges missing from it that aren't yours within 60 days, or you lose a lot of protection in terms of getting that money back. And so sometimes I do warn people to be careful about linking a debit card to something that an account that has, a large balance of savings. It's better to be linked to something which is an account where you just have perhaps your monthly expenses in there. And so if you did lose money, you wouldn't have the risk of losing so much. So it's just one of those things to think about. It's just kind of interesting that the way the laws got made, that we just don't have the same protection with a debit card that we do with a credit card. With a credit card, you're only liable for loss of up to $50. All right, so moving on to weird definitions and weird things out there, we wanted to talk a little bit about open loop versus closed loop systems. A bank and a credit union is an example of an open loop system. So, for example, if I want to send money to Andrea, either with a check or using Zelle, which is electronic transfer system, she doesn't have to be at the same bank or credit union that I am to be able to pay her. The bank or credit union is the intermediary, and I can pay whoever I want out of there, as long as they have a way to use that check that I send them. So that's kind of nice, and I think we take that all for granted because we've been doing that for a really long time. In contrast, we now have a lot of closed loop systems out there. Some of these have been around for a while, like PayPal. But basically, if you, for example, want to use one of the peer-to-peer apps like Venmo or Cash App, or one of those, you need to be in the same system. So if I want to Venmo somebody money, they have to have a Venmo account. So the funds don't really leave the system. They're just kind of going back and forth within that same company's app system, unless you specifically have asked them or set it up to transfer to an account that's linked to it, like your checking account. So this is important when we're looking at, is our money safe? Because we were talking about the fact that in the bank and credit union's open loop system, that money is insured. But if the funds are staying in a closed loop peer-to-peer system, then your money is not insured by FDIC or the National Credit Union Association. So the reason it's kind of like one of those background things that happens with keeping our money safe, in the banks and the credit unions. We don't even really think about the fact that all of a sudden, if we're storing a significant amount of money, for example, on one of these peer-to-peer apps, it doesn't have the same protections. And so we need to really keep that in mind and make sure that anytime you have significant balances in a peer-to-peer app, that you've got it transferred back to an insured financial institution. So I've been using these words and they are out there. I'm sure many of them are familiar, but the different apps that we could think of that are very common right now that are providing these peer-to-peer services are things like Venmo, PayPal, Cash App, Apple Pay, Google Pay. And by the time we finish here, um, you're probably going to be having, there in the next month, there may be another one out there. So keep these things in mind. And yes, there's a good question in the chat about, do people have, the owners of these apps have some responsibility? Absolutely, if they want to stay in business, right? They have responsibility to keep your money safe because we all care about that. But we don't have that backing from a federally authorized organization to be insuring it. So if something happened where one of these companies really did go bankrupt, you would be in line with a lot of other people to perhaps get your money back, but it is not insured and is not guaranteed. So great question. So peer-to-peer payment apps have pros and cons. They're really easy to use. It's so great to just be able to transfer money to a friend when you've gone out together. So it's really good for flow of small amounts of dollar. Um, but there are some possible disadvantages too. Like it could be that there's fees associated. You have to check. Each one has different policies and regulations. So you really need to know the system you're using. And remember, it can be also very um, difficult, if not impossible, to stop payment if you send it to the wrong person. And so they have systems in place to try to help you not do that, but it can happen. And so then it's on you. So definitely things to think about as we use these peer-to-peer apps. One last thing I just wanted to make a little note about because we're in that holiday season about gift cards. And I think the biggest thing to remember, along with them being very commonly used, is that there can be lots of different kinds of fees associated with gift cards. And again, it's one of those things where it's very hard for us to generalize about it in a webinar because it just varies so much, but they should come with a prepaid card disclosure where you can look at it and it's clearly stated what are the fees that you're working with. So take a look at that if you're using anything significant and make sure that you get those prepaid cards used up so you get the full value of your gift. All right, so I'm going to move this on to Andrea.
Thank you so much, Kathy. So, we've talked a lot about spending and tools for spending or transferring money. And now we're going to talk about how to save. It can be kind of difficult to save money, especially during times of transition. For example, students have a particularly difficult time with irregular cash flow and unique funding streams while they're in school. However, just even setting a little bit aside can really help provide some security and a safety net in case something goes wrong. So, at different times in your life, we may save in different ways and for different things. So, our need for specific financial tools to help us save could change over time, especially as our financial goals and needs evolve. You may not use all these tools at the same time, but it can be useful to be aware of them, especially when you're making some transitional differences, right? When choosing a financial account, you might want to think about how you will use the money that you deposit into it. Is it for covering daily expenses, or are you going to be saving money for a future goal or a potential future emergency? Accounts like checking accounts, which might be called like a spending account or something different by your financial institution, can give you easy access to your money. It's something that Kathy spent a lot of time talking about with financial institutions, whereas accounts like savings accounts can still give you relatively easy access. But it might be limited by the number of withdrawals over a month, or other kind of characteristics. But you're likely to get a little bit more interest paid to you by using a savings account, and you can make this account a little bit less easy to access so that you're less likely to spend money from this account impulsively if you are earmarking it for certain goals, like you want to go on vacation with that money, or you want to make sure that money's set aside in case you lose hours at work, right? And so that's where the value of having emergency savings is in place. Even if it's just a little bit, it can help you cover a wide variety of surprises. So it could be like a broken laptop or a flat tire. Maybe you have a high deductible for your insurance if you have to make a claim, and so having that money set aside can help you, like if you get in an accident or something else happens. I already mentioned a loss of hours at work, especially for students. Income volatility can really impact our financial well being, which we'll talk a little bit more about later. But it can also be used for unexpected opportunities like an unplanned concert or trip, or maybe you want to go take advantage of a professional organization event. So, in thinking about that and what tools might be useful for emergency savings or other savings goals, how much do you think you should have in savings? This is just like you to think about. We're not going to have you respond to any polls or anything. Um, but typically, a financial planner would suggest having a savings set aside as a safety net if you can't work or if something else interferes with your cash flow, would be really helpful. But there are times in your life where you may not be able to accumulate several months of essential expenses in your savings. And in that situation, what do you do in an emergency? Or if you, what would it look like for you? Again, there's no magic number for a savings amount that you need. There are a lot of tools out there that exist as safety nets. So thinking about your own safety nets, would community resources or family or a backup income stream help you navigate a financial challenge if it comes up if you don't have enough in savings, for example? Um, it's important that you look at your capacity when deciding how to establish your savings habits, as well as what your monthly costs are, your regular monthly expenses. And it's important to remember to just start where you can. Developing that savings habit, even if it's a small amount each week or paycheck, can really have value to your overall financial well being and getting you ready for longer term savings goals. So, we do want you to think about this in the chat. What strategies, tools, or tricks have helped you set money aside for savings? Because this is a challenge. There are a lot of different strategies. There's even different tools and apps out there that might help structure your savings behaviors, especially if it's something that you struggle with. People that have a lot of income volatility might struggle with this as well. Some people in the chat saying automatic transfers. That is a great way to help your saving strategy. Um, some people will set up automatic transfers direct from their paycheck. So they'll do an auto debit from their paycheck and make it go, a portion of it go straight to their savings. Or their retirement accounts, like their 403b, or if you are a university employee, it will go to SERS. There are also other tools that we have available for retirement planning that we can auto deduct to. So that's really helpful. From an inspirational perspective, I appreciate that someone said they create a vision board of the thing or experience that they want to save towards, which can really help keep things focused. When you're talking about behavior change, it is just as much a mental perspective thing. And so having those kinds of strategies can help you not feel like you're restricting yourself so much. So keep those ideas going. We think that they really help everyone involved in our chat. But I'm going to keep going because we still have a lot to get through. So, one tip that you might think about in how you use your savings account is you might think of it as a safe place to keep money, maybe from summer jobs or from scholarships, maybe birthday money, and then you transfer enough money for maybe a month of expenses to your checking account from that savings account once a month. So it will help you kind of bucket your money or distribute your money over a longer period of time. Especially for students, this might be helpful. Some people will choose to open savings account maybe at a different financial institution, maybe across town, than what they use for their daily checking or financial account. And they may not link them electronically, especially if your savings account is for longer term goals, like buying a house, for example. Then it makes it a little more difficult to have to physically go to that financial institution to withdraw any money. And that makes impulse spending a little bit harder to engage in that might eat up your savings. So, just a tip to think about. Another tool or strategy is to think about mental accounting. We can manage our money a little bit easier when we categorize it and put it into different buckets, for example. So maybe you put money to spend this week in a checking account versus money to last the entire semester or year into a savings account, especially if maybe you're a contract employee and you get payments, big bulk payments quarterly, and so that might help you uh, strategize your budget and how you transfer and think of money throughout the year or quarter. So you can use this method to save for longer term goals too, like if you're saving up for a trip or a down payment on a new car or a house. This can having these different financial accounts earmarked for different things in mental accounting can help you kind of put boundaries around those funds and help you think about that a little bit differently. All right. So it's also important to remember that small amounts add up. We talked about earlier when you're establishing your emergency fund that starting small can really help you, even if it's just a little bit. But that also goes for spending, not just saving. And it also goes for investing. For example, if you spend $2 a day on a soda, that would end up as $730 spent in 1 year. If you put aside $5 a week into a savings account, that would end up being $260 saved in a year. If you're thinking about investing, $300 a month invested in a stock based IRA that averages a 7% annual return over a 20-year period would result in over $153,000. So, all those small amounts add up over time. And that's kind of what we want to emphasize here. So, after you have established kind of a savings habit, you have your insurance set aside, you've got protections against risk set up, then you can start thinking about building wealth. And the best way to do that is through investing. And there's several different tools you can use to build wealth, not just investment stuff. So, for example, money markets and certificates of deposits or CDs are typically available through like your financial institution, and they may pay more interest than on a traditional savings account. However, there are certain restrictions that are placed on your money. For example, maybe if you put your money in a certificate of deposit, there is a penalty for early withdrawal. So it's important to keep that in mind in thinking about how you're going to use those funds. For money market accounts, you might only be allowed a certain number of transactions in the period that you're supposed to keep the money in the money market account. So that's important to keep in mind. Investing, like I said earlier, is really your best option to fight the cost of inflation. So, but it's not insured and it comes with higher risks. So those are things to consider when you're thinking about how to leverage your money for what your needs are in a particular point in time. We've talked about investing and kind of investing adjacent concepts a lot in the past. You can learn more about investing through some of our previously recorded webinars and podcasts. So thank you to Suhas for putting a lot of that in the chat. We also have an upcoming webinar in February on investing that we're partnering with the US Securities and Exchange Commission on. So you can make sure that you are registered for that if you haven't already. And I'm going to hand it back over to Kathy to talk about some of the things to consider when borrowing.
Thank you, Andrea. That was great. And I know that we have people on listening today with, just a lot of different variable questions and things. And that's why we're just jam packing the chat with links because hopefully you'll be able to go deeper into the things that are of interest to you. And do know that there will be an email sent out with a lot of these links and things. So if you don't get them all now, they'll be coming because it does seem like we've got a lot of good stuff out there that for you to do some further research with. So now we're going to move on and talk a little bit more about habits and tools and strategies to consider when borrowing money, because that is another financial service that we have available to us out there that allows us to do things now and pay for them more in the future. And the first place I'd like to start is with looking at the wide variation in APRs or interest rates that are out there when we borrow money. And I just put up here 9 different possible ways that people might commonly borrow money to kind of illustrate that. And we want to keep in mind that when you're borrowing money, you're always looking for the lowest APR, the lowest interest rate out there. So let's take a look at some of these. And these are just for illustrative purposes. They're pretty current, but it could, of course, be different in your own community. So people always tell me borrowing from family and friends, and they don't have to pay anything in the terms of interest on that. So that's always a good one to keep in mind when we get in a crunch, if that's a possibility. But other things like credit cards and personal loans are going to have, interest rates that are running in the teens to the 25, maybe 36%, even from loans from banks or credit unions. So we're starting to edge our way up there. Mortgages are for more specifically when you're buying property, like a personal home, and they're usually for longer, 15 to 30 years. And so the interest rates, and they're for large amounts. So the interest rates tend to be lower. So right now, in our communities, we're looking at something around a high 6 to 8%. And car loans are another pretty good, hefty loan out there. And it was interesting to see how much they had gone up in the last time, since the last time I'd used this slide. So we are seeing higher interest rates on things like car loans, 5 to 21%. Home equity loans, that's where you get a loan on the amount you've paid down the principal on a loan. So the value of the home versus the market if you were selling it. What would be that gap? And so that's another tool that is out there. But remember, when you take out a home equity loan, you're actually using your home as collateral. So if you can't pay it back, something goes wrong with your income flow, then your home is at risk. Then we get into payday loans, which are ones where you get typically a short-term loan, maybe 2 weeks, and the amounts, the fees don't seem that much because you're often people are taking out a loan for not so much, but if you figure it out for an annual percentage rate, they can really vary, and it's not been unusual in states without legislation to see 400% on a payday loan APR. That's very, very high. Now in Illinois, we have a legislation that protects us and it keeps it so that the interest rates can't be higher than 36%. But again, sometimes we have people nationally, so I want to make sure that that isn't a given anywhere. We may also have people on here with student loans and, especially federal loans, we're seeing the range between 4 and 15%. But I also know that people sometimes go um, out into the communities and look at, getting a personal loan to help fund their student loans or student loans, and they could vary. So that's kind of, you see those little plus signs means they can go up. Now, vehicle title loans are one I want to just really kind of talk about if you haven't heard about that before. A vehicle title loan is when you've paid for a car or a boat or a motorcycle and you get a loan on that title. So that title is your collateral, that car or vehicle. Those loans APRs can easily go to 150 to 300%. And the scary part is that we know from research that somewhere around 1 out of 6 people lose um, their vehicle because they can't pay that loan off. Often people take out these loans when there's something bad has happened and their emotions are running and they're not necessarily fully thinking through everything. And then the interest rates are so high, it's just next to impossible to pay them off. So Huge variety out there. Kind of makes credit cards look better. Not that I'm saying that that's great to pay that kind of interest rate, but it's just good to know what the variety is and to always do your shopping around and try to get that interest rate as low as possible. So one of the things that I think is also interesting to people is that when you start talking to people, you'll realize everybody has different attitudes about borrowing money, and these are valid attitudes. There are no rights or wrong, but it is useful to have a sense of how do you feel about it? And if you make financial decisions with a partner, then it's good to also kind of know where they stand on these. And so we did this little poll just to help you think it through. How do you feel about borrowing money to buy a new computer if yours broke? Would you use a credit card to pay for a concert ticket? Does that feel convenient or does it feel like a way of overspending and a trap? Would you get a student loan to help pay for college? Again, different attitudes and different feelings about this. Would you borrow money from a relative or a friend for a trip, like a cruise, for example? And would you use credit even if you could pay cash? So we're already seeing a pretty interesting distribution on the surveys. I'm just going to give you all one more minute to, well, not really a full minute because we are on tight time, but a few more seconds here to answer. And then we will end this poll. And again, no right answers. This is really more just to have you kind of think about where you stand. Sometimes some concepts we've had about things stand in our way, and other times they help us protect us. So I'm going to end that poll and share the results, just so you can see how much it varies is really the main point, and that when you are in a relationship and working with somebody else on your finances, it's good not to make assumptions, but to raise this as a conversation and to have a chance to think about where do you all stand on it. And of course, we didn't put in the except in or just if type answers, which is what often comes up in a discussion, and it's good to know. All right, we're going to go ahead and stop sharing that and move on. So let's take a little time to talk about credit cards because that is a financial tool that is very common in our society and many people are using. And there are both advantages and disadvantages, like any financial tool or service. And so some of the advantages I feel are that can be a safety net. If an emergency happens and you don't have the money, maybe handy. For example, if you are on a trip and your car breaks down, it may be very useful in that situation. It does give you a 20 to 30-day loan with no interest, that kind of grace period that can be helpful. And we've already talked about it's safer to use online than a debit card because you have the option of stopping payment, and it also protects you from identity theft. And using one and paying at least the minimum payment on time will help you build a positive credit history. But of course, like everything, there are downsides too. And boy, those fees and interest rates can really end up being costly if you find that you are overspending or can't make your payments on time, or you just forget to make a payment on time. So definitely something to be aware of. Some people find that it's easier to overspend if they're using credit, and that's something you need to learn and understand about yourself and then take steps to manage that. And of course, we always do need to monitor all of our financial accounts, including credit, to make sure nobody has stolen any information and is using your finances for their gain. Okay, so if you are shopping around for a credit, it's good to start out by thinking, how much do I really need? What is the credit limit I want? Not necessarily letting the credit card company set that limit for you, because they might set it higher than what you're comfortable with. So you can always call and ask them to set it down lower. Think about how will you use it? What are the parameters you want to set around your behavior? Definitely look at what is the cost. Different cards will have different costs. And again, knowing yourself will help you decide which of the fees are you likely to run into and are important. And then a plan on how are you going to pay back this money is always useful. And probably an extra special good reminder for this time of year when I feel like the marketing and the stores are all about buy, buy, buy. So thinking through these questions can be very helpful when you're shopping around. We want you to use credit cards wisely like you would any other financial tool. It's on you to read your statements and make sure that you know what's there, um, and to make sure that it's accurate and nothing is you're not getting any fees or odd little charges that you don't know about or subscriptions you forgot about that you want to take into account. So pay attention to those interest rates and really try to pay on time in full when possible. Okay, so that was really quick about credit, and we do want to just remind you that we have a lot of different webinars and podcasts out there about credit. So if there's something specifically that you're more interested in, or you just want to pursue this a little bit more, please follow up by looking at some of the resources that are in the chat. Now we're going to take a minute to talk a little bit more about something that's relatively new and kind of just becoming much more common, and that is a buy now, pay later, which is a form of borrowing. Essentially, when you go to make a purchase, you may have the option, it may pop up in your checkout online or at the terminal at the grocery store, and it'll say, would you like to divide your payment, would you like to divide your purchase into equal payments? 4 seems to be a very common number. And today you only have to pay the first payment at checkout, and then they will either deduct it from your checking account or charge it to your credit card for the following payments. So let's look at an example. Let's say that it's getting cold and you see a great coat on sale for $100, but you don't have the money right now. You could buy it with one of these buy now, pay later plans. Just divide it up into 4 payments. So you'd have $25 that would be paid at checkout. And then you could set it up so that it would perhaps be charged every 2 weeks. And that would help spread it out over your next few paychecks. So you would finish with your last payment in week 7. So you do pay the whole $100, of course, but it does help spread it out. And so that's an example where it could really be a very convenient and advantageous tool to use. But as we've been saying throughout this presentation, everything has pros and cons. One of the other pros of a buy now, pay later is it may not require a good credit score to be able to use it. Often they seem to be interest-free, but not always. They're very common. And, you get to use that winter coat now while it's cold. You don't have to wait 3 paychecks. Cons are things like it's going to add debt payments to your future income, might make it, again, easier to overspend like any kinds of credit. It is each per company's buy now plan, pay later plan has a little bit different policies. And so there may be interest charges. You have to really read the fine print. Late payments may cause fees, or there could be other fees. So really do pay attention again to those extra little information that they provide to make sure you understand what you're getting into.
I
I do
think
want
just sorry, I just
to
wanted to say that one thing that was not clear when Kathy and I were researching this is it's not clear whether or not all companies report on-time payment history for buy now, pay later to the credit bureau. So it may not have a positive impact on your credit history.
correct. It might not have positive or negative. Again, it's just you have to really dig deep onto their websites to see if they report, and it may not even be very transparent. So, good point, Andrea. Thank you. So, um, but we want to be aware of what happens in other scenarios if you sort of get into the habit of using buy now, pay later all the time. So let's say that you are at the grocery store and it comes up as an option when you go to pay. And week 1, you think, great, I'm just going to pay $25 today for my $100 bill. And I'll just set it up to pull out of my checking account going forward. That's fine on week 1. Week 2, you go to the grocery store again, it pops up and you're like, hey, this sounds good. I'll just pay $25 and let the other remaining $75 go forward into other weeks. But you'll actually in week 2 pay $25 right there at the grocery store and have $25 out of your checking account from last week groceries. And one thing to stop and ask yourself is, did you already eat all those groceries? And is this really helping? In a time where you're really tight for money, this could be a strategy, but doing it over and over again every week is going to really add up. And as we can see in the next slide, by week 4, you'll have $100 coming out of your checking account, even though you might have only spent $25 that week actually at the grocery store, at the cash when you checked out, because you've got 4 weeks piling up on top of each other in week 4. And going forward, that will continue. So think about it. When is it a good time to use it? And when is it maybe stretching yourself too much in the future self, so that in the future you're going to be putting yourself in a bind because you've spent things that now you have to pay for. All right. Just one more time, we do want to remind you all to monitor your accounts carefully and frequently to make sure things are looking good. It's always helpful if you have credit cards or you're using debit cards when you're traveling to let the companies know so they don't put a stop on it because it looks like you're spending money in Florida when you live in Illinois. And if you notice anything odd, pick up that phone or go directly to their website and contact your financial institution to make sure that you understand what's happening in your account. And on back to Andrea.
Thank you so much, Kathy. I know we're going fast, but hopefully we can take a little bit of breath and talk about financial well-being. Different financial professionals or educators use different measures to describe financial well-being over time, but we're going to take a moment to kind of explore what it means to researchers and to us. So, the Consumer Financial Protection Bureau has focused a lot of research to both define and describe financial well-being. And what they found was that financial well-being is a highly personal state. It's not described by someone's net worth, like how much they own, or by one objective financial measure, like a credit score. So when you're thinking about your own financial well-being, think about what does that look like for you? What does financial well-being mean for your own situation, how you feel, the way you perceive your relationship with money, because that can impact how you navigate financial choices and choose financial tools. So, after kind of synthesizing all the research on financial well being, the CFPB provided this table to explain how financial well being has 4 elements to it, both present and future time, as well as security and freedom of choice. Those are kind of perspectives to keep in mind. So, this model of financial well being, and there are many other ones out there, but this particular model supports the idea that people need these 4 intersections in order to perceive and report a sense of financial well being. So think about how that applies to you and your life. Where do you feel secure and what might you want to change? For example, do you feel secure in the present but not so sure about what the future means? This might indicate that you need to increase your savings behavior for the future or decrease what you view as risks to your financial future. Just having kind of our needs met doesn't fully describe financial well-being. So people also want the freedom to do and have things that make our lives satisfying as well, not just secure, but also makes us content in where we are and have some satisfaction. So you are welcome to go online and try out this financial well-being scale yourself. You can answer the questions and think about how you have a relationship with money, how you view money, and it can also help you think about how you define well-being, both financially and maybe in other areas of your life. One thing I do want to know is it's not based on a 100-point scale. So look at it in the context of what feedback you get, not just the point that you might get back in your results if you use this. So, another thing we want to remind you of is that finances are super complicated, and new technology and tools make continual education kind of a requirement to navigating our financial choices throughout our lives. And it's important to remember that we can ask for help in navigating those financial choices or transitions because there are people that's their job to help us. Um, so for students, uh, you might look for supports on your campus if you're feeling any financial well-being issues or you're experiencing a loss, for example, a laptop break. So there's a lot of technology support and device loan programs through our colleges and departments. We have food banks both on or off campus, surrounding the campus, in case you are struggling with your grocery bill or needing some ways to meet your nutritional needs. There's also financial coaching through some student services offices. We have links in the chat as well, which we will also be sharing in our follow-up email that you can check out. Additionally, if you are maybe remote or you're part of the community, there's both community and government aid programs that you can check into. If you call 211 or visit 211.org, you can find programs that are catered to your local area, which are very beneficial. If you're in Illinois and you're low income, you can use the Supplemental Nutritional Assistance Program or check into that if you're eligible for it. There's also things like the Affordable Connectivity Program that there's information from the FCC on, and then LIHEAP, or the Low Income Home Energy Assistance Program, is available for low income individuals to get help with utilities costs, which may be increasing over the winter. So, we also produced a lot of episodes in some of our podcasts about some of these community programs or government aid programs that might be helpful if you're struggling with utilities or you need help with your health insurance, or you're a homeowner and you need some help with maintenance or dealing with taxes, or if you're navigating rental issues. So there's a lot of supports in place that you can ask around about. So just to summarize, because we're wrapping things up, we want to remind you to use all kinds of financial tools to monitor your accounts and manage your cash flow. We want to encourage you to build healthy habits that can help you with navigating credit decisions, or to develop your safety nets like savings behaviors, which can be very helpful for you long term, not just in the short term. It's important that you understand the costs of the different financial tools in your tool belt or in your tool chest. So watch for fees. Don't be afraid to comparison shop around. For example, we talked a little bit about credit. One thing with credit is that if you are searching for an auto loan, we're always worried about negative impacts on our credit worthiness or our credit history. If you apply for multiple auto loans in a short period, usually it's like a 7 to 14 day period, that shows up on your credit report as a single inquiry instead of multiple. So think about that when you're comparison shopping as well. You are not stuck with one option just because you applied to that option first. And then ask for help. There are people to help you. You can also ask questions of your vendors, your financial institutions, to better understand the limitations of the tools or the benefits of the tools that are available to you. Our next webinar is on January 24th, 2024. It's on January 24th at noon, like most of our webinars, and it will be on money in your entrepreneurial pursuit. So if you are a small business owner or you want to start a small business, but you're kind of anxious about what that means to your personal finances, we're going to focus on managing money in your entrepreneurial pursuit or your small business endeavors. You can watch previous webinars on YouTube. We will try to get this captioned and up on YouTube in the next couple weeks. And you can stay in contact with us through our websites. And you can also ask us questions. But we know that a lot of people need to go places and do things. You're very important people and you have things to do and you're busy, but we'll stick around if you do have any questions or if we missed any questions in the chat. If you do have to go and you have questions, but you don't have time to stick around, you can email them to studentmoney@uillinois.edu and we'll try to get you an answer. All right. So I think I did that all in one breath. But Kathy, were there any questions that we should address now?
I didn't see anything we missed, but that doesn't mean that it didn't happen. So, please, if we weren't trying to ignore anybody, they're all good questions. So if we missed it, put it in the chat again. Um, I do know, we kept telling ourselves we had to not try to cover too much, but yet we still did cover a lot. So, uh, there, hopefully
Financial
it
tools are
answered some questions.
challenging. Yeah.
It is sort of a little bit of a scary arena out there, and the times sometimes when we just, we're all moving fast and trying to get a lot done, and so, but taking the time to stop and think about, is my money safe? Am I monitoring it? Those, looking at the accounts, those things are really important in order to maybe save us money and time down the road. So
I think a lot of people, when they ask me questions about specific financial tools, um, there can be a lot of enlightenment just by understanding how the vendor is getting payment. And that leads to asking questions about fees or what are the consequences if I don't move this money into an insured account. So, kind of understanding the pros and cons to each tool is really helpful for making a decision on whether it's going to work for your needs.
definitely, we don't mean to say that every service is good for everybody. I don't use them all. I use a lot of them. Andrea probably uses ones I don't use, and vice versa. So,
Mhm.
it's just a matter of kind of sorting them out to find the ones that work well for you. And it may change as your life, what you're doing in your life changes too.
Absolutely. I do not see any more questions in the chat. I'm going back that we didn't already address. So I think I'm going to wrap up the recording. Again, thank you for joining us. Thank you for listening to us talk about all these growing and changing financial tools, and have a fabulous day.